Hello, folks. Stan Bird here on Sunday, April 16th. This is the second session that I'm doing today. Today we're going to talk about, on this one, we're going to talk about the banks and some of the sectors, take a look at the sectors and what they're doing. On the last session, I talked about the general market and how it looked like it wanted to head higher, even though it might not be. It might be a bumpy ride, but eventually I think we're going to get back to new highs. But today I'd really like to speak about the banking sector in particular, because banks started reporting on Friday. So we'll take a look at some of those. I did make some predictions about some of the big banks. I don't remember if I did it on this channel, but I did it on LinkedIn. And I'll show you some of those charts here in a second. If anyone's interested in joining my newsletter, there's no charge for it, and I don't sell emails or anything like that. It's just something that I do for myself when I do my research to share it with friends and family, and then folks on this channel now as well. So if you're interested, just send me a note to breakpointtrading@gmail.com, and I will add you to the list. And the last one we talked about last week's economic calendar and CPI reports, etc. So what I want to do right now is to talk about where we are with the sectors. The first thing to take a look at is these are the major sectors, the S&P ETFs that represent the sectors. And this ranks the sectors. There's a lot of different ways I can do it. I'm starting off here with a year to date. And the three sectors that are the most aggressive, or you could say the growth sectors, is XLC, which is communication services, and that's where the internet stocks reside. XLK, which is the technology sector, and XLY, which is consumer discretionary. So discretionary are things that you want to buy, not necessarily things that you have to buy. So a new car, for instance, or a new TV, that type of thing, things that you would like to buy. Typically, if the economy is doing well, if everyone has jobs, which the job market is still doing very well, then folks are still going to be buying those extra items like that. Now, the XLY is primarily made up, the two leading stocks in that particular sector are Tesla and Amazon. And you might say, well, you know, they represent something like 35% of that whole ETF, but they're the most important companies. So you probably want them to have a major representation. But that's kind of what these sectors are about. So if I look at the year to date, notice that the three aggressive sectors, the three growth sectors, are outperforming the S&P. The S&P, these are ranked by percent change since the beginning of the year. The S&P is right below those three. So that means they have outperformed for this year so far. Now, if you think about that, if we listen to the news and if we are heading into a nasty recession, like everyone seems to keep talking about, and by the way, you will see lots of links and lots of things coming across your news feed and things coming across YouTube and everywhere else saying that the market is getting ready to crash, that so-and-so has predicted the last 3 declines, and this is what he's saying this time. And everyone's talking about a nasty recession coming. And if you want to understand how to avoid it, click on this link. Well, those are all meant to get you to click on those links. Rather than doing that, why not just look at the data itself? Look at the price. Look at what the sectors are doing. The market will tell you what's going on. There's no reason to be clickbait and just click on things because everyone's telling you that the sky is falling, and the only way to save yourself is to click and sign up for their service. By the way, this service is free. So if we look for the beginning of the year, the three most aggressive sectors are leading and outperforming the S&P. Why would that be if we're heading into a nasty recession? Wall Street knows what's going on. They look 6 to 9 months ahead. So keep that in mind. Now, interestingly, financials have been the worst performing sector since the beginning of the year. And that kind of makes sense based on the banking crisis we had a month ago. So that's the reason, and all of those basically fell off a cliff. So the financial sector hasn't actually looked too good. But let's take a look at what's happened in the last week, more recently. So I can click on 1 week here, and it will show me these same sectors and how they've performed. Well, now look at that. Financials suddenly not only is outperforming the S&P, which is right here, but financials is the #1 sector in the last week, followed by energy, which also had not performed very well. Now, discretionary is still outperforming the S&P. Communications and technology over the last week have been underperforming. But the most interesting thing to me is this financial sector that's actually outperforming. If we dive into that to see which industries inside of that are outperforming, and you can see here, this is ranked by XLF is the financial. So it's ranked by sector first, and then the industry group inside of that sector. And what we find is the #1 industry group over the last, this is just on Friday, because the big banks reported on Friday. The #1 industry group is financials. That was just for Friday. If we look at 1 week, then we see metals. So gold has been doing well. Brewers, trucks, interestingly, have been doing really well. But if we just want to look at Friday, the banks did fantastic on Friday. So now let's take a look at some of those banks. First, let's look at seasonality. So here's seasonality just for that banking industry, the one that I just looked at that was at the top. So seasonality, this is something that stock charts allows you to do. You can do it for a stock or for a sector, for a group, or anything that you want. So this shows you over the last 5 years, which months does this particular industry group perform the best? And what you'll see is April is the second best performing month out of the whole year for this particular industry group. So that bodes well for banks. Typically 40% of a stock's move is because of its industry group. So right off the bat, we know that banks should do well in April. October is actually the best month for banks. So now let's take a look at those 4 that I mentioned. And the way that I have this chart, this is what I call my relative strength chart. The way I have this organized is, and this is the way we're going to look at something here in a second. We start with the sectors. So the gold up here is the sector. How is the sector performing, financial sector performing versus the S&P? You can see here how it fell off a cliff at the beginning of the year. Now it's starting to come back. The next one, the green area, is how are the banks performing inside of the financial sector? So how is this particular industry group? I just showed you that it's #1 on Friday. And you can see that it's starting to make a comeback right here. But it too, the banks have not done very well over the last year. The next one, which I think is actually the most important one, is how is this particular ticker symbol, in this case, JP Morgan, how is JP Morgan doing versus its peers in its own industry group? So JP Morgan versus the banking industry group. And what you can see is from all the way back here, this goes back to October. So this is basically where the market started to recover. So starting from October all the way through today, JP Morgan has outperformed the banking industry. So it's outperformed its peers. Now, ideally, you would like to see something that is, going up in the gold area. In other words, the sector is outperforming the S&P. Going up in the green sector, meaning the industry that it's in is outperforming its own sector. And then the stock itself is outperforming its own industry group. So that's a strong sector, a strong industry, and a strong stock. In this case, the first 2 aren't that strong, but starting to improve. But JP Morgan is extremely strong. It has been consistently outperforming its peers other than a little dip right here in the middle. And then the last one, just kind of as added benefit, is how does JP Morgan do against every other stock in the market? Not just the 500 that are in the S&P, not just the 100 that are in the NASDAQ 100, not just the 30 that are in the Dow, but every single stock in the universe. And this is how JP Morgan is performing against every other stock. And you can see that it started to spike here as well. And then after JP Morgan reported on Friday, you can see what happened. reported great both top and bottom line, and JP Morgan is heading higher now. All right, so that's JP Morgan. So the thing to focus on is the blue one primarily. The gold, the other four banks I'm going to show, other three banks I'm going to show, the gold and the green will look very much the same. The blue is what you want to think about. And what I said on LinkedIn when I showed this, I said in looking at the three, JP Morgan, Citi, Bank of America, and Wells Fargo. Citi looked like the best one. I'll show that in a minute. JP Morgan looked like the second best one. Wells Fargo looked like the third, and Bank of America, which reports on Tuesday, looked like the worst, relatively worse. So there's JP Morgan. Next one is Citi. Again, the gold and the green are the same. That's how does the sector perform against the S&P, and how does the industry perform against the sector. But look at Citi versus its peers in its own industry. Again, very, very well outperforming for quite some time. So I expected that it was going to do well with earnings on Friday. And as you can see, it also spiked up and is heading higher. So Citi also looks really good. This is a way, by the way, if you own a stock already and earnings are coming up and you're trying to decide whether to keep it through earnings or get out of it before earnings, this is one factor that you can look at. There's a couple of them, but this is one. You can look at its relative strength versus its peers, the other stocks in its own industry group. And if it's strong against its peers, it probably will do well at earnings season. The other one to look at is the accumulation distribution, which is down here. So you can see whether it's being accumulated or not. Typically, there's a quiet period before earnings. So there's a two or 3 week period before earnings that the executives at the company can't talk to analysts. But before that period, analysts are talking to them all the time. So analysts know what their business looks like. So you'll usually see that in the accumulation distribution line. And you can see with Citi, it's going up here as well. We look at that with JP Morgan. You can see the accumulation distribution. Now, most of them are going to look like this because this is that banking crisis right here. But what you can see with JP Morgan is that it actually is exceeding, as of Friday, it's actually exceeding its peak, its 52-week peak. And Citi is not quite exceeding its peak, but it's moving up. The next one is Wells Fargo, which also reported on Friday. Now, Wells Fargo did not do as well. So you can see the sector and industry look the same. However, Wells Fargo versus all other stocks, it has been underperforming all other stocks. And versus other ones in its own industry group, the blue one here, it has kind of been mediocre. It's outperformed quite a few of them, but doesn't look as good as Citi or JP Morgan. So you can look at all those. There's JP Morgan, there's Citi, there's Wells Fargo. So Wells Fargo didn't look as well. And if you look at the accumulation distribution line, it has not even made it back above its 50-day moving average. So I would have said before earnings that Wells Fargo probably would not do well with earnings, mostly because of the accumulation distribution. And even though it was fairly strong against its peers, it wasn't great. And then finally, this is the one that's reporting on Tuesday, Bank of America. Also doesn't look great versus its peers. It's kind of like just bouncing along sideways versus the other ones in its own industry group. It reacted along with JP Morgan and Citi, so it got a little bump here on Friday. But look at the accumulation distribution. So this is one that we'll see what happens. Bank of America may not report as well as JP Morgan and Citi did, mostly because of what the accumulation distribution. It does not look like it's being heavily accumulated, not like JP Morgan and Citi. So that's just a way to take a look at different stocks to see what their strength looks like. There are ways in stock charts where you can set up different chart views, and you can have quick links to them over here. I have one set up that I call relative strength, which has these basically set up the same way for other. And then I have a default one. This is my default that I typically will look at. There's different ways you can do it. There's a 3-year chart. I always like to look at a long-term chart as well. So again, this is Bank of America. Even in the long term, even before the banking crisis, it wasn't looking too good. So we'll see what happens. Now, since we're talking about sectors, let's take a look at another one or two other ones. So this is how I have my main screen set up on stock charts. Over here is the sector summary. So it shows me as of Friday, you can see the financial sector was the #1 and energy was #2 on Friday. So right away, I can see what's going on. I can also see the best industry. So again, banking, the banking industry was #1. Look at #2, trucking industry. That's interesting. And then more importantly, if we go down here, the internet index was 1, 2, 3, 4, 5, 6. #6 was internet stocks down here. The XLC, which I'm going to take a look at here in a second, which is the sector that these are in. So you can see XLC right there, the internet group. We'll take a look at that. So here's the XLC on a long-term basis. This is a 3-year chart. Now, the first thing to notice, if you haven't picked it out already, I'm going to annotate this. If I put a horizontal line in here, put a solid line, and make it a little bit thicker. Let's put this line in right there, right about where it's at right now. Take a look at what you see. There's an inverted left shoulder, inverted head, inverted right shoulder. So this is sitting right at the break point line for an inverted head and shoulders. That means if this breaks out, and it's right on the verge of breaking out, in fact, it's right below its 200-day moving average. If this breaks out next week or some, it could come back down and then try again. But if this breaks out of there, the target for it is the difference between this 45 and 60. So 15, so 75. The target is up here. It should head up to here to 75 if this breaks out. So how do we take a look at the stocks that are in this particular industry group? Well, if we look at stock charts, you can go up to charts and tools in the upper left-hand corner in stock charts. And down here has sector summary. You can view the sector summary, and here's communications. Again, this is for just for Friday. But again, if I look at year to date, it's #1. So it's the best performing one for the year. And I click on communication sectors, and it shows me year to date which one of the industry groups is #1. And you can see the #1 industry group is the internet group. That's for the whole year. So this means this is the best performing industry in the best performing sector year to date in the whole market. And if I click on internet, it shows me the best performing stocks, and Meta is #4, believe it or not. Spotify is #5. 1, 2, 3, 4. Yeah, Meta's #4, Spotify is #5. These other two above it, these are penny stocks, $1.03, $2.90, $1.01. And then you've got Meta and Spotify, which are significant players. And so this is one way that you can find stocks to trade. If I look at Meta right here, right click and open it in a new tab. This is my standard format. And look at Meta, just climbing at a 45-degree angle. It's going straight up. And if I look at this on a relative basis, again, it will show me how it's doing versus its peers. This is the type of relative chart you'd like to see. Everything heading higher. So the sector versus the S&P is heading higher. The internet group versus its own industry versus the communication sector is heading higher. Meta versus its peers, basically ever since the low back here in right after October, November. So it's been outperforming its peers, and it's outperforming every other stock in the market. in the universe of stocks. So Meta right now still looking strong and may actually even get stronger. So other ways that I can look at this is the default view that I have. This is a 3-year view that I can look at, and I can look at a 65-day view if I want to look at something much more closer in. So this just shows basically each one of these is 65 minutes. So there's 6 of these in a day. So these are all, each one of these 6 are 1 day. So Meta looks really, really good. Just out of curiosity, let me go back to the sectors again and look at industrials and trucking. Remember I said trucking was up near the top, which kind of surprised me. So I don't even know what this is going to show. But if I click on trucking, these are the best stocks in the trucking industry. ArcBest, Old Dominion, Knight Swift. And if I look at just this one here, take a look at its chart, we can see here that it looks like it's just beginning to break out. So this is one that might be just starting its run, and that industry looks like it's just beginning to run. And if I look at the relative strength chart, you can see it's outperforming its peers. The sector and industry aren't great. They're kind of going sideways, but this particular one is outperforming its peers. So again, that's just a way to take a look at different ways to look at stocks. The final thing before I close out is just take a look at what VectorVest is showing us right now. And I show this in my newsletter, which I often do. This is the intermediate signal. It gave a buy signal on March 31st. It was in danger of actually going below right here when it almost went below this line, the 30-day line, but it didn't. It's still going up. So it's still hanging in there. So right now it still has a buy signal. And if we want to look at all of the sectors, I can look at, again, the communication sector. I have all those same stocks here in VectorVest. I can look at these are the top 10 in VectorVest, and I can see if any of them have issued a new buy. None of them have. But this is another way to take a look at that. And then finally, we've looked at the dividend payers. So I had a portfolio of 3 different types of dividends, which I ranked since the beginning of the year. So I've got this set up to start from January 3rd. The blue chip scan is a scan that VectorVest created to look at blue chip dividend stocks. It's currently year-to-date down 5%. The aristocrats is an industry standard way of identifying dividend paying stocks. These are stocks that have paid dividends every quarter and have raised their dividend every year for the last 25 years. And if they miss even 1 quarter, they're dropped off the list and they can't rejoin for 25 years. So those are the aristocrats of the dividend stocks. That one is down just a little less than 1%. And then the last one, this is one that I created myself using not only the best dividend stocks that are in the VectorVest universe, but also using other parameters to show the strength of the company itself. How is that particular company doing? Now, interestingly, a lot of these that ended up on this scan were in the energy sector. So you can see here, these are all almost all energy stocks. There is a banking stock, but most of these are energy stocks. And energy is starting to make a comeback. So that would kind of make sense. These are the top 10 from the aristocrats. So you can, again, you can see over here, you can see the industry groups, chemicals, gas. This is a better diversified group. So if you're looking for diversification, this one might actually be better. So there's some petroleum, business services, retail, a little bit of everything in this particular one. And this is kind of keeping up with the market. So a little bit lower. So we're going to track these as we go along and see how they do. The blue chip scan from VectorVest. VectorVest has shown this, and I, on one of the sessions, I actually did an analysis of this going back the last 2 years, and it outperformed even in 2022 when the market was down. It outperformed by 15%. So it did pretty well. Again, it's nicely diversified. semiconductor, bank, petroleum, utilities. There's a little bit of everything in this particular group. So even though it's down more than the other ones, we'll see how it does over time. Over time, it might actually perform pretty well. Anyway, that's where we're at. So that's it for today. If anyone would like to join my newsletter, just send me an email to breakpointtrading@gmail.com, and I'll add you to the list, and then you'll start receiving them week to week. So thanks again for watching, and I hope that was helpful. Let me know what you think, or send me a note on the channel, and I'll try my best to respond. Thanks, everyone, and have a great weekend.